Hello and welcome to the Upside Fund feature. I'm Helen Pang. I'm here today with Madeleine Kaminski. She's an investment associate on the product research team here at Fidelity, covering Fidelity North American equity class, which we're very excited to be looking into today. Welcome back, Maddie. So good to see you again.
You too. Thank you so much for having me, Helen.
Fidelity North American equity class recently celebrated its 10-year anniversary and was awarded a Lipper Award for the best North American equity fund over 5 years. This is the fund's 5th consecutive year winning a Lipper Award, a testament to its consistently strong risk-adjusted performance relative to peers. So we have lots to talk about today, Maddie. Can you start off by giving us an overview of the fund and how it came to be?
Absolutely. Fidelity North American Equity Class, managed by Portfolio Manager Darren Lekkerkerker, is a leader in the North American equity category, in which Darren is able to own the best ideas that he has across the US and Canada. The fund can be best characterized as a US equity fund with the best opportunities that Darren identifies across Canada and the flexibility for him to invest where he identifies the greatest opportunity. Darren is a seasoned portfolio manager with additional responsibilities managing Fidelity Global Natural Resources Fund and the equity sub-portfolios of Fidelity Canadian Asset Allocation Fund, Fidelity Canadian Balance Fund, and Fidelity Inflation Focused Fund. Back before Fidelity North American Equity Class was launched in 2015, investors were advocating for a standalone fund from Darren. They were impressed by the performance of his other mandates, so a standalone fund was a natural next step.
Yeah, so it does feel like it was just yesterday, and I think what happened was I wanted to have a standalone fund. I was excited to have a broader mandate that also not only included Canada, but also focused on the US, right? And I kind of thought, like, at that point, the US was doing well, the outlook for the US was really strong. Clearly, US has done really well for the past 10 years and it's benefited the fund. The structure of the fund is 70 US and 30 Canadian, but there's a lot of flexibility. It can go to 0 Canada or 50% Canada, with the balance being US, and with I can add some global in there as well. So I wanted to have a broader mandate. I thought focusing on the US would result in better absolute performance. And I think just given the US has a higher focus on technology, healthcare, consumer, I thought that there'd be more secular growth and more innovative companies that would help me in not only in picking for that fund, but also picking for my Canadian stocks as well. I mean, look, like, I'm competitive, I wanna win, I wanna do a great job for the people that put enough faith in me to buy this fund or buy this fund for their clients. And so I'm glad that we achieved a really positive outcome.
Fidelity North American Equity Class has experienced strong absolute and relative performance since its inception in late October of 2015. Over the 10-year period ending November 30th, 2025, the fund returned 14.6%, outperforming its benchmark and beating 95% of peers in the North American equity category. At a medium risk rating, Darren aims to achieve long-term capital growth by investing in high-quality equity securities across North America. One of the things Darren often refers to is the ownership mindset that he employs to investing. Can you tell us a bit about what that means?
That's a great question, Helen. Throughout Darren's experience in the industry, he has developed what he defines as an ownership mindset. What this means is that Darren considers each investment as taking an ownership stake in the business, not as a short-term trade. When he holds a stock in his portfolio, he's buying into the business and indirectly hiring the management team of the company to grow the company and act in the shareholders' best interest. Due to this, he takes a prudent approach to evaluating each business before investing. Darren emphasizes the importance of attending as many company meetings as he can as part of this process, an approach he learned from Will Danoff. He stresses the importance of doing so, as meeting a management team face-to-face allows him to gain a more comprehensive understanding of a business and assess the strength of its management team.
I like to invest in high quality companies. So number one, I focus on the quality of the business. Is this a great business? Does it have a competitive moat? Is it going to be durable, or can it expand over time? Management team. Everyone says they like good management. What does that mean? So one, we interview them as part of the process, and we do so regularly. Two, does management own, like, how much skin do they have in the game? Do they own a lot of shares? Like, how much shares do they own versus like what they get paid? Like, I want them to go home and think about increasing the share price, not increasing their annual comp, right? And then 2, capital allocation. How is management done at capital allocation? What do they plan to do? We want them to focus on doing the highest risk return adjusted thing for capital allocation, which is investing the excess free cash flow of the company, whether that's in M&A or share buybacks or higher dividends. And then 3, valuation. The price you pay is important and it has a big determinant on the return going forward. Having said that, I prefer a wonderful business at a reasonable price than a reasonable business at a wonderful price.
Darren has mentioned that he feels optimistic with the current economic outlook for next year. Can you share where he's currently finding opportunities for this fund?
While optimistic on the current macroeconomic outlook, Darren remains focused on ideas driven by bottom-up fundamentals. He emphasizes the importance of selecting the right manager over making a macro call in order to maximize long-term performance.
I'm not a macro person. I always have a macro opinion. And I think that if I do, it takes time away from researching individual companies, which can really drive the results of the fund. And I also think that over the past 10 years, if you were very macro invested, you probably would have been more conservative or defensive, and that probably would have been a big headwind for returns because obviously the past 10 years have been pretty strong in the stock market.
Darren believes North America offers particularly strong investment prospects due to its robust innovation pipeline, favorable demographics, and resource self-sufficiency. Darren continues to emphasize the importance of understanding what you own and focusing on higher quality companies. Within the fund, Darren has been finding opportunities within the consumer discretionary and communication services sectors reflected in his overweight positions in each. The multinational Canadian clothing retailer Aritzia, a top 10 position in the fund as of September 30th, 2025, is a holding Darren added during tariff volatility earlier in the year. He believed the firm presented a compelling investment opportunity due to the company's strong brand momentum and successful expansion into the U.S. market. The firm saw strong recovery following Liberation Day as improvements in tariff sentiment propelled the firm's stock price upwards and the outlook for imports improved, contributing to strong investment results for the fund. Darren has also been finding attractive opportunities among communication services companies such as Netflix, another top 10 position in the portfolio. Netflix has found success recently due to its strong pricing power in the industry and expansion into other streaming services such as live events.
So I think the economy looks stable. I think it looks decent. I think the AI trade at the moment looks strong. So far, company earnings in the third quarter have been really strong, stronger than the second quarter, which was stronger than expected. So companies are very profitable and in a good shape. And so I think it's a decent outlook that we have here. I'm optimistic and continuing to look for the best companies.
And that's all for today's show. Please follow us on our socials, including Instagram, YouTube, LinkedIn, Facebook, and Reddit for more great content and the latest financial updates. You can also head to Fidelity.ca's investor education section to check out our articles, sign up for the Upside newsletter, get information about upcoming live webcasts and on-demand videos. Whether you're learning investment basics or looking for more advanced knowledge, we can help you become a more informed investor. As always, working with a financial advisor is among the best investments you can make. Thanks for watching, and I hope you'll join us again on the Upside.
Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.